these numbers are super interesting, right? Because this whole report is basically aiming at like, hey, the US is missing out on kind of global revenue, global leadership in crypto because you have not regulated your shit. And this is actually like a concrete data point that you can now point to them, or like you can at least give them upper bounds, lower bounds of like, hey, like you've probably lost. I think further in the report, it's somewhere like $1.8 billion. It calculates like a lost tax revenue, like a potential, which is like I don't know 600 million, which is like I don't know. Elon and his Doge team need to search for a good couple of weeks to find that much money that is being wasted. Hello, everyone. Welcome to another episode of the Index Podcast, where the three of us come together every couple of weeks to discuss on-chain data, chart crimes, and metrics that move the crypto industry. Before we get started here, nothing we say here should be relied upon as legal, financial, investment, tax, or even life advice, and we are acting independently of our respective professional roles. And with that, today it's just the three of us again, which is always nice. And today we're gonna dig into a report that Dragonfly and in that sense Hildovy has put out on airdrops. Are airdrops worth it? What is the impact of banning Americans from airdrops? How much dollars did Uncle Sam lose through that, and all of that good stuff? So maybe to get started there, why even like look into airdrops in 2025? The meta seems kind of over. Like, why did Dragonfly focus on this?
You need to zoom out a bit. What we're trying to assess here is the impact of geo-blocking. So especially the US, because this is 25% of GDP and like an important country in general for crypto. And it's really hard to measure an impact generally. How do you assess? How do you normalize everything? Like all protocols are different. So we chose airdrops because it's one of the most normalized essentially ways, like fairly, it's always the same. It's like tokens are distributed, people claim, what changes is like the percentage, who claims it. And here the major difference we're looking at is like, was the US geo-blocked or was it not? And trying to assess how much has the US missed out on it. But the hidden conclusion isn't just on airdrops and how much was missed. It's also a proxy for just US participants missing out in crypto overall. And when an airdrop is geo-blocked, it's not always just the airdrop, nor is it the other way around. Sometimes you can claim the airdrop and you don't have access to the rest of the website. There's many examples where, to us Europers, you can actually see and visit those websites, but you're probably not aware that they're not available in the US. And of course, you can always, go through the smart contract itself. Those are like all publicly accessible to anyone. But the front ends are another thing, and it's the venue, obviously, most people choose to use.
You're kind of using this as a proxy to measure negative impact of US negative regulatory action on US citizens. And because airdrops are such a normalized field, that lends itself well to this, to making the comparison. Is that kind of
that's my point of view on the study?
You're looking at the category of airdrop to measure how much has the kind of the US regulatory regime that has been kind of in place under Biden and before under Trump as well.
Yeah.
How much negative impact has this had on US citizens? And to compare situations equally, airdrops lend themselves well to this because it's kind of always the same case, because it's like you mentioned earlier, it's like, people claim, like, there's a website, people claim tokens, and like that's the whole story.
Mm-hmm. Yeah. So lack of legal clarity in the US, I mean, it's not new. I think we've known this for a while. It's been, annoying for devs to build in the US because they don't know, what not to do and what to do. So we know this topic, obviously, but I wanted to look into the impact of this lack of clarity. And what we did is use airdrops, as a measurable proxy for this impact. Now, of course, it's not the end all be all kind of proxy. There's other ways to measure, but this felt to us like an an easy middle ground and like thing where everything is normalized. A lot of big projects have had airdrops in the past. So I also had a decent sample size, which was also something to consider. And yes, we measured and looked at historically which did geoblock, which didn't. And what we'll find is that the very early ones, such as Uniswap, did not geoblock, whereas later on, very quickly, US got geoblocked from quite a few airdrops, which I would even say are the notable one, based on my echo chamber, probably, but what I would view as some of the more notable ones.
Do you know why U.S. government want to ban airdrop in U.S.? What's the reason that they do that?
They don't. It's just we don't know what they want to do, and it's more
Okay.
about securities law. Is the token viewed as a security or is it not? And basically, no one knows. And so yeah, obviously the we've had a change in who's in charge, and things have started shifting. But we want to highlight this in order for, first of all, to have a reference point so people can say, okay, like this is a quantifiable amount. What was the impact in a quantifiable way? Because it's always hard otherwise. It's very subjective. How would you measure otherwise? I honestly don't know. I don't have a good answer because you can't compare like a lending protocol volume to like Uniswap, or I don't know, just about everything is different. And yeah, we just wanted a reference point so people can quote this and use it as a numeric number that they can actually quote.
Yeah, speaking of the change of the regulation, I think like one thing to celebrate for all the crypto community is that the Tornado Cash sanction list got removed from OFAC recently, and I think the what's his name? He got released or his charge got lifted or something. And so did the person who created Tornado Cash.
I know about the Tornado Cash sanctions being lifted. I'm not sure. I think there's two devs, one of them being in the US and one in the Netherlands. But I'm not sure about change on either of them being released or anything. Honestly, I haven't checked about this lady, but that was my thought when I saw that like the bans on using Tornado Cash itself was lifted. I thought surely next up is actually freeing the devs, because they deserve freedom, I think.
No, yeah, I think Trump signed an official presidential pardon for Ross, who is a.
Oh really?
Oh wait,
Oh,
no,
no, that's
sorry.
Ross Ulbricht.
Oh, okay,
That's the founder of Silk Road.
Oh, okay,
Yeah.
I mixed them together. But
Yeah, for Ross
I guess-
Ulbricht, it was something I think he planned like way earlier
He
before
he
he
promised
was
this.
elected.
I had a
Yeah.
big polymarket bet running on this for quite a while.
it.
I believed in the promise.
Well, it worked out.
And
I'm
then
pretty
he
sure.
did it.
Oh, good bet, good bet.
Yeah. I wanna comment also that like it's so ironic where like they're banning the U.S. people to receive airdrop, and meanwhile you have to report your airdrop in your tax IRS. So it's like I mean
But it's not that the US is trying to ban people from getting the airdrop. I think it's the people issuing the airdrops that are scared of giving free, like basically offering free securities to users and then being sued by some US government, because historically the US government, or like the US federal system government entities, I don't know, the SEC has been the only one who like really sues people. Like no one else internationally has like the reach that the US government has. So even if you're like, I don't know, I don't, let's just say Falcon Coin, which is it's not a real project, and you sit in the UAE, you might still think, let's not fuck with the US. Like let's just exclude these people. I don't really care. They can break the laws themselves. Like we'll just exclude them, and like if they use a VPN, it's not really our problem anymore. So I think that was always like the thinking of these projects of excluding US users, because you don't want to fuck with the securities law. So you kind of like exclude them. And I don't know, like did anyone actually go through like the exercise of like really making things VPN proof? I think most just went to the like Oh, okay.
So
So,
that's also something is some do choose to, you know, go through the route of like actually preventing VPNs. Now, of course, you can even, you know, if you have a VPN with like, you know, someone hosting it locally or whatever, obviously you can always get around it and stuff. But for most people, that means VPNs are also out of the picture. Um, so yeah,
okay, so
like
they even made sure that like the reason, like I guess in front of a judge in the US, you could say like, yeah, we banned like all VPNs, and it's like, then you can be like, but I don't know, are you sure? And then it's like I think you can kind of take like a second step, which is like, we're also banning like all kind of obvious VPN providers, and then you can really say like, hey, we actually made sure that like no US people were able to participate in this. I think this like differed from airdrop to airdrop. Basically, it's like the whole thing here was that everyone was scared of the US government coming after them and basically saying, hey, you just I don't know, you airdropped free security to my citizens, and what are you doing? You're now getting a Wells notice, or I don't know, like we'll sue you.
you could always go directly interact with a smart contract yourself. Like if you really want to claim the airdrop, regardless of where you are, you can. Maybe, you know, it's harder in like China or like North Korea, obviously, but you know, in most cases, it's you can claim it if you really want to. Um, the thing is, they basically want to have no legal implication of this. The only way to completely ban would be to slash allocation rather than the claim itself. But then, how would you fairly determine from the get go without KYC? You know, who's from where? Um, so I don't think anyone does this essentially. But you can always go out of your way and do it. But then, you know, in your tax reports, you would need to state that you have claimed if you want to be, you know, in remain legal. Uh, and I'm not sure what the implication of this is, but I'm guessing this also scares away the claimers. So it's not just, oh, I can't do it because they can, and most people probably have this in mind. It's like, I can actually do it, but what are the implications if I actually file this in my taxes and stuff? How do I, you know, do I get in trouble? Well, basically, we don't know. And like you said, it's like it's mostly from the scare of these issues getting sued to the ground. I think we've seen many crypto companies getting sued for a lot of the reasons lately. I mean, in the past few years, actually, lately we've seen those being lifted in many of the cases, which is awesome. Um, but yeah, it's kind of this uncertainty, which is weird and has both the issuer and the user at potential risk.
Very nicely sets the context for this conversation. Um, so you kind of built this, or the report is built in a way uh, where you just kind of take away all the high level findings. So maybe we do the same here, and you just tell us like, hey, what did you find, and then we can talk about how did you actually get there afterwards. I think that would be an interesting way to structure this.
Yeah. So the goal of the report, the final number I want to land on, was how much was missed out from U.S. residents from airdrops. So there's multiple steps to this. The first being like how many people are U.S. residents? Like how do I know, you know, what percentage of address I should be looking at or stuff like this. Um, so it's really hard to get an actual nominal value. So I looked into getting a percentage rather, because you know every protocol differs, and I assume that distribution is fairly equalized for each of them. Meaning that, like, you know, if there's X% receiving for Uniswap in Europe, there's going to be X% receiving in 1inch. It is an assumption, of course. No, none of the data is going to be perfect. You know, if I had a crystal ball, I would have perfect data, but that's just not the case here. Um, so in order to determine the percentage of active users, I looked into two stats. One of them being, I don't know if you're familiar with, let me share my screen, with a fairly popular report, which is from Electric Capital. They release it yearly, and it's a developer report. My assumption here was that it's a pretty good proxy for like percentage of dev is across the world is probably a good proxy for percentage of active users. So that was my assumption here. You can see that 24% in 2024 of active devs were based in the US. It does change over time, so I did also take the percentage for each year, and I also took another source. So Electric Capital's developer report is based on GitHub activity and how they interact with several repos that they have, kind of like whitelisted as stuff that is interesting. And they curate this yearly, and it is at least by far the most popular in this category. I know that every time they release it, I hear quite a bit about it. And if you haven't, there's a ton of data. So it's really cool to sieve through and look through and actually make sense of kind of this social layer data and making sense of who are actually participating in this whole crypto economy. So yeah, generally recommend you read through it. They release it, I think, November or December every year. And it's the third one in a row, I think, and it's really good stuff. So this is the first source, and the second source was me on Dune, and what I did is essentially look at all active addresses on. I took Ethereum because this is what you'll see later, where most of the airdrops were airdropped, and I partitioned based on time zones and looked at if 80% over 80% of the activity is within one time period. I allocate this address to this time zone and therefore this region of the world. So I did this for every year. I divided in I believe five places, being North and South America, Europe and Africa, East Africa and West Asia, and then East Asia and like Australia. Out of this, I got North and South America, and I have a percentage which roughly is actually higher than what is found in Electric Capital's report. Now, I just want to caveat, obviously, there's many addresses that are bots. There's so many outliers. Not every address is one-to-one. But my assumption, again, is that all these bots and everything is going to be fairly equalized and across the globe, and going to also match, that percentage of potential actual percentage of users or like real humans. You can always go like big brain this and have so many filters and go way too deep and essentially losing you in the process of reading this. Or I thought simplicity would actually be kind of good here, because my assumption, I would say, is a decent one of like, hey, like this bot activity matches user activity and matches all other type of activity, and therefore can be ignored or seen as negligibly impacting these numbers. So yeah, using those numbers, I have for every year 2 different percentages, and then that gives me a range. I use that range for like percentage of active addresses in the US. That is number one. The second step is actually looking at airdrops themselves. I selected, so actually going back a few years, I created on Dune a table called airdrops.claims, where I bundled all claim events for, I think, around 50 different airdrops. And I actually never used it. I just always assumed this would be useful one day. And it's also because one of my first piece of works on Dune was making a dashboard on airdrops. So I thought eventually a single airdrop is, I think, no longer that interesting in data, but I think bundling them all together makes for potentially very interesting analysis later down the line. And the hard bit isn't actually coding, but it's actually knowing which smart contract to look at, stuff like this, because it's fairly repetitive coding. But once I have those contracts, I might as well put them somewhere and save them for later, which is what I did. And then, once we talked about this internally, I thought, great place to use it. That's what I did. Added a few. The problem is, yes, I had over 50, but a lot of them are not geo-blocked. What you'll find is that if you rank all those, it's fairly top heavy on which are geo-blocked. So the most notable ones tend to be the geo-blocked ones, and that would be also the ones that have the most attention on them and the most prominent projects. I chose Uniswap as kind of a reference because it wasn't geo-blocked. It's also fairly historically known. It's one of the first of its kind. Of course, there were others before, but not to the scale. And Uniswap was, the first notable start of right after DeFi summer, and people were very interested. If they were in the blockchain, they probably knew about. If they're looking at blockchain, they probably knew about Uniswap. So I used this as reference frame, and then chose 11 other projects that were geo-blocked throughout 2020 to 2024, and measured what was the total claim, added the percentage of US users on top, and then said, okay, well, this is the percentage I should be looking at, and therefore this is the dollar value of claim that was missed out on.
So what's the dollar amount?
The dollar amount, let me share. So here are the projects that were geo-blocked. 1inch Blur, Eigenlayer, EtherFi, Arbitrum, Ethena, Optimism, ApeCoin, DYDX, ENS, and Layer 0. This should be, for most people that are listening to the podcast, names they're probably familiar with. They're fairly notable projects. And here you can see the total lifetime claim dollars per airdrop. This is all a Dune query that you can look at. It's referenced here, number 144. I was looking also at the number of addresses. Now, of course, we know claimers and addresses are not the same at all. But that's what I could pull. I can't. If I could pull users, that would be amazing. But that's not the state of things. I also wanted to look at the median, because I thought that was an interesting tidbit. ApeCoin had very few claimers, but it was like 40K per claimer, whereas some other project, Ethena, had 46,000 and it was 72 per claimer on average. So yeah, interesting stuff. Sorry, on median. And then what I did is take the numbers before. So here you can see column D, which is the percentage of US users based on the year the airdrop happened, because it fluctuates over the years, and I calculated it per year. So here for 2020, for example, this is 14 to 42%, which is a very large range. But I'd rather have a large range and be cautious than over kind of analyze and have an exact number when it's not really exact, not really accurate. So yeah, and here you can see the lower and upper bounds for each airdrop. Now, of course, if the number were the same, which happened in 2023, as you can see for both here, the upper and lower bound are going to be the same. But otherwise, this, when summed up, leads to a range of 1.8 billion to 2.6 billion. So this is the final range. It's like, okay, US residents have missed out on 1.8 to 2.6 billion dollars for these airdrops, which is, again, just a sample of those, but I would say some of the more notable airdrops. And yeah, this is the first conclusion, essentially. And we have finally a number, but there was also another report made by CoinGecko, which quantified airdrop value and how much was claimed, and they quantified in total 20. Interesting, actually, they have 26.6 here and 21.7 here. Okay, but it's 20 something dollars. I summed up the values from below, and the reason this number is so different is actually, yes, they have more airdrops, but most of the additions are going to be more like tail end. They're not huge in terms of dollar values, but you'll see that the ones we have in common, they're priced a lot higher, because the way I price the claim is at claim time, I took the price of the token at the minute within which it was claimed, whereas they chose to use the all-time high price for each claim, which
Yeah,
I would
it's a
call
chart
a
call.
child crime, but was interesting regardless. So I took their numbers as well and redid the same analysis based on their numbers, which of course ended in a higher. Wait, no, not this one. A higher dollar values, which here you can see 3.4 billion to 5.02 billion, and that is across 21 projects they have listed that are geoblocked, because out of the 50, not all are geoblocked.
Yeah, like there's an order selling $10 of whatever coin for a extremely high all-time high value, and then they just priced everything on that price, and that's just definitely a
Yeah,
chart crime to me.
I would say so though as well. Unless I think pricing at claim time is the easiest, because you can never accurately price at sales because there's so many ways to sell, and it would be an endless analysis that once again I simplicity is often better, just for comprehension and actually getting the message across, rather than losing yourself in it's already a pretty lengthy report, so I don't want to make it twice as long just for a simple analysis that you can actually neglect to actually derive from to get the same conclusion. But yeah, so what do you think about the report? What are your questions coming out of
I
this?
My first reaction is that when you say it's a money that user lost, it's just like the money that was allocated to them that was never claimed. And so does that money goes back to the treasury of the project after the claim expiry, or just be sitting there forever?
There's three scenarios. There's the Uniswap method, which is uh, unbound claim, so you can claim will be open forever, or at least that's what they claim. Maybe they change it one day, but that's theoretically what happens. Um, Another thing is the tokens get burned. That part gets burned, and then the third one is, like you said, it goes back to treasury, and maybe they use for future airdrops or whatever. But it's also worth pointing out that here we're not looking at total claimable, but total that would have been claimed, given that because I'm looking at total claimed as a reference point, and out of total claim there was also some that didn't claim. So we ignore those and only look at what's claimed, and extrapolate this number for the US. And this is the number that would have been claimed, not could have been claimed. Right? Do you understand the nuance?
Wouldn't the total claimed have been higher if US participants were able to
Yeah,
claim?
yeah, yeah. No. Yes, but essentially, when uh, airdrops, even 6 months in, there's not 100% that is claimed, right?
Yep.
And I'm only looking at the percentage that was claimed, so I'm not overestimating for things that were not claimed, essentially.
But wouldn't American persons existing and not being able to claim artificially lower the percentage of people that claim?
Yes, yeah. No, it would definitely, but I assume that it's the same. The percentage of claimers over there is the same as the percentage of active addresses over there relative to the rest, and I add that percentage on top. So of course it's not. Uh, my point is that I never arrive actually at 100% of tokens. I'm always under 100% of
But like,
of
is it possible
airdrop tokens.
is it possible the amount that was not claimed are all US and it's not accounted?
It's that would be for another analysis that I actually don't know how it would conduct.
I
One of the
mean,
problem is
right.
you have for airdrops. There's two datasets that are interesting. One of them is the claims. Those are you can find on chain, and as long as you know the address. And then there's the eligibility list. Those you usually have to go through every project and ask them, and
Yeah.
some will show them, some will not. So it's a bit of a hassle, and I've actually tried this before, way before this report, when I was looking at airdrops way back, and I found that most it's just so hard to get it from them.
I
You'll
see.
find also other projects complaining about this. Rotkey and like other like, you know, airdrop claim check websites are struggling constantly to get this, and that's like the value add they have is like they collect these eligible lists for you, and then you can batch check for addresses.
I see. I think that changed the whole understanding of the report for me because I thought it was like checking how much money were not claimed because they're in US, but it's actually how much money were claimed, and also this address might be in US, and you're projecting it
Oh no
as
no no
like
no!
if.
It's the former.
Oh, okay.
It is. Those are unclaimed dollar amounts
Oh,
that
okay.
would have been claimed if the US could, if US residents could claim. This
Okay.
is the estimation based on the claimed amount and percentage of US in active participants of crypto.
Got it.
I
Got
guess
it.
it's like somewhat of a simplification, but in the end, you're never gonna receive the actual numbers because we
Oh
all
yeah, yeah,
know quite a few people in the US who've actually just claimed all of these as well, right? So it's like you need
yeah,
to you need to draw the line somewhere, and that seems to be like a reasonable line to
yeah.
draw. And it's also like, yeah, finding the difference between what has been claimed and what could have potentially been claimed. That would be like a whole research project. Um, so yeah, I see this kind of fencing. Um, yeah, I think the like methodology on how to get geolocations, like I think this is a problem that a lot of people are working on, or like that would be interesting data. The marketing folks from Spindle would probably be very interested, or I don't know, chain
From base
analysis is
now.
probably yeah, yeah. Are they all right? They completely got absorbed. They're now, I don't know, wallet
Yeah.
marketing or whatever. So, yeah, fair enough. So yeah, on that front, like yeah, just taking the developer numbers and extrapolating them to user numbers, I think that's like a bit sketchy. And it's like, but anyways, I think it's like however
This is
you
an
slice and dice this, it's like you're always gonna end up between like 20 and 30%, and you ended up between 20 and 30%.
yeah.
So like I don't really like I think you can find a million different ways to get here. I think this is like it's a reasonable assumption to make. Also like looking at addresses when are they active, looking at the patterns there. Is that like the perfect way? It's probably not. Um, but if you just kind of yeah, I think those are all fair assumptions. And then to imagine that $1.8 billion of wealth have been stolen from hardworking Americans. I think that's a very interesting. No, I like in the context of the conversations that are currently happening, probably in Washington D.C. and so on. These numbers are super interesting, right? Because this whole report is basically aiming at like, hey, the U.S. is missing out on kind of global revenue, global leadership in crypto because you have not regulated your shit. And this is actually like a concrete data point that you can now point to them, or like you can at least give them upper bounds, lower bounds of like, hey, like you've probably lost. I think further in the report, it's somewhere like from those 1.8 billion dollars, it calculates like a lost tax revenue, like a potential,
Yes.
which is like I don't know 600 million, which is like I don't know.
Mhm.
Elon and his Doge team need to search for a good couple of weeks to find that much money that is being wasted, I guess. So like to look at the other way around of like, hey, how do we just generate this income? I think that's interesting. Um,
Yeah.
Generally, I think airdrops are like an unfortunate topic here, but like I see why you guys did this because it's like it is the only thing that is like cookie cutter like a cookie cutter template where it's always the same, and then you can actually kind of aggregate these numbers up and be like how like it's impossible to say like, hey, this is how much revenue the US has lost because options trading is banned or whatever. Like that's just not numbers you can
Yeah.
somehow fabricate. So it's like this is like the near closest thing where you can actually go kind of produce a whole report, be very like structured about the whole approach, and then be like, okay, like these are actually the numbers that come out here.
Yeah.
Yeah.
So I think like
For
basically
for
to summarize. to summarize, I think there's two basic shortcoming or limitation for this approach. One is for the people who are actually VPNing and claiming airdrop, they're lowering down the amount that was not claimed. So that makes the estimation kind of like a lower bound. And the second part is that the projection comes from the developer percentage, right? And so the developer percentage versus the user percentage might have a difference in terms of like who is receiving. But I guess it's kind of like correlated because a lot of the airdrop actually drops to the developer. But still, like there might be other pure user like me. I'm not on any of like the project developer, but I'm getting airdrop who is not projected, meaning like the US user percentage could be higher that we're not capturing.
Yeah.
But
So
I want to like go. Sorry, go ahead.
so that just to go back on the tax number, first of all, is like 525 to 1.38 billion, just for listeners. And then I agree with you on all this. It's definitely not a perfect case study. There's a lot that could be improved. My question to you is, if you want to, if you want to calculate something but don't have the exact numbers or something, is it worth using a proxy or is it worth not doing the analysis at all? And my the main conclusion that should drive from this is that those are significant numbers. It doesn't actually matter the exact number. It's not going to impact whether it shifts a bit, but those are significant numbers, and it showcases that the impact is can be felt by US residents and so on. Of course there's VPN claimers that can get around it, but that is also something that's unquantifiable.
Did you look at clusters around crypto conferences if there's more claimant activity?
If you look at like DEFCON and look at Ethereum mainnet's airdrops, there probably is something there if you look at like isolate those 3 days or whatever. But yeah, once again, that's like one step too deep. That's like on a 50-page report or something.
Yeah.
I don't know if I want to add pages.
Yeah.
I would rather just make sure that the point is easy to convey and easy to understand.
Yeah, absolutely. Yeah, I would love to be a fly on the wall on these conversations in Washington now, where like I don't know, Hasib or Tom, like, they go to a senator and they're like, hey, like US citizens could have gotten free money in the form of a token that's called sushi. And your shitty regulation is preventing people from getting sushi to buy real sushi. So I think all of this is like, can we maybe collectively like, what are other like I mentioned earlier of like you could try to, because option trading is really, or like leverage trading, I think more generally is like really tightly regulated in the US as well, right? Where Coinbase only is able to offer like 10x leverage, where Bybit just gives you like 100x leverage or something. So is there any other metrics that we can think of what might have like other proxies? But like I really,
if you go deep you can always, but it's like you kind of lose the point if
I mean, you guys went really deep here. That's like that's kind of the point I'm trying to get at, where it's like it's really really hard to actually estimate like, okay, how much does regulatory uncertainty kind of cost the US or cost any economy, because you just can't build your protocol. And like we've seen like an outflow, and the report states as well, where there's a report like there's reports of outflows of builders, and people wouldn't want to launch their coins, and like the whole industry has been held up by all of this lack of regulation. It's like it's such a irony. Like in Europe, we're getting overregulated. Like everything is fucking boxed in, and like everything is very minutely detailed. But at least we know where we're at, and we can actually work with those regulations, and we can do stuff. And US, the regulators have just been like, nope, like we're just not gonna take any decisions. It's like I don't know. It's a very I don't know. It's an interesting predicament.
It's counterproductive. And actually, talking about Europe, I saw today Initia just did their airdrop, and I was, for the first time ever, I saw that it was geo-blocked from France, and that a bunch of Western Europe countries were geo-blocked. So that includes Spain, Germany, Denmark, Netherlands, Belgium, and I don't know what this has to do with, but yeah, I just thought that was interesting because it was like my expectation when going into the airdrop is in most cases probably I'm not eligible, and sometimes a bunch of little free money. This was like I was like, oh wait, damn, is my VPN on? And then it wasn't.
Wait, are US people banned as well?
Yes, of course.
Wait, who are they even like? Who are their users? I guess Southeast Asia. That's fair.
It's actually a good way. Like if I want to launch and only French people, I just geo-block everyone else. It's like no, that's a
it's
great
kinda
way to
getting
launch a
frustrating.
project.
It's kind of getting racist.
But it's
Joke,
yeah,
joke.
I don't know. It's weird. Also countries like Japan, Turkey, South Korea. Uh, I don't know. I found surprising. I just thought the list was interesting. People mention uh, stuff like Mika, but I don't know enough about Mika to actually understand the full implications and stuff like this. But yeah, I guess uh, lack of clarity isn't just in the US; it's just a lot more prevalent over there. And maybe this is just an outlier that means nothing, honestly. Until we have more data points that go this way, I don't think it's worth driving any conclusions here.
I want to move on this topic where I'm curious on the other side of the story, but I'm not sure if that's a focus in the report. But like for the people who actually claimed airdrop from the protocol, did that really had any positive outcome of the protocol? Which, because in general, airdrop is incentivizing to have more people to use their projects. And I don't know if you guys looked into if those airdrop claimer actually, stayed on, or another aspect is like if they hold the token or just dumped it quickly. Yeah.
Like, are they pointless, anyways?
Yeah. Or there's another topic, like a whole topic where like if there's airdrop farmers, right? Like one obvious way to look at it is like if they had activity before the claim but then died after the claim, and so to identify them as like farmers. There's also people who are like spinning up 100 wallets to trying to Sybil farm it, and so basically like how many real users were there that are actually targeted by airdrop. Like so many interesting things to look into if airdrop actually works.
I feel like it's a question with so little actionable data on that it's really hard and it's almost more philosophical than anything. Like, if you give money to people, do they care about your stuff, or do they still give as much of a shit as before?
Right.
Um, and it's really hard. That wasn't the focus of the report.
Hmm.
But yeah, I think this is reminiscent of like what Tom said of the chopping block, and it's pretty like well-known quotas like airdrops are kind of pointless anyways. And I think he's mostly right, because it's I kind of see it as like a customer acquisition cost. It's like a marketing event that you have either once or at least once with a huge impact, and then maybe later on you can do all the smaller drops, but the impact is usually not as significant. Um, and there's no right way to do it. Everyone does it their own way, experiments their own way. So it's super hard to really answer this question. You could look at do a price analysis based on this, which actually I'm doing something similar with like VC unlocks and stuff like this on price analysis, which will release later. But I don't know how I would assess are airdrops useful. The point is usually those protocols, if they have raised money, there's a token warrant, they eventually
Mhm.
will release a token. Now, from my viewpoint, if I am airdrop money significantly from one protocol rather than its competitors, I might care more about it. Even once I sold, to me, it feels like it leaves a small lasting impact. This is unquantifiable technically. I can't actually give you measuring numbers or anything on this, but it's I don't know what would be your answer. Do airdrops that you have claimed have they made an impact on you? Maybe using more that protocol or using it at all when you didn't before. Like,
Yeah.
what is your view on this?
I think in my opinion there's many layers of metrics you can monitor for example if the retail imagine I'm launching a dex, the
Hmm.
way to attract liquidity would be giving some incentive, like potentially give some tokens. So if to measure that like launching a token, and likely that will be more of like a actual effective measurement. But that's not airdrop, I guess. That's more like incentive bootstrapping. But in the case of like looking at how some people are trying to airdrop, competitor projects like Vampirish, and towards the retail side, I think it's probably useful to see like if they actually got attracted to go swap on that DEX, and if so, how many times and how like did they retain after even just a few days after? That's one thing, and the other thing is like if they just dump the token right away, or they never even use the product, and so to see like that would be a failure. And yeah,
Yeah.
overall, I think what else? What are the targets of the airdrop? Yeah, and also like to see if many addresses can be clustered into one cluster, and to basically figure out, say, okay, maybe there's 100 addresses are funded by same wallet, and apparently these
Yeah.
people all get like an airdrop because they did the same amount of transaction before, knowing that there might be an airdrop, and also potentially maybe they're all like wash trading ish, like we're swapping stable to stable, trying to get like a high volume. And so to detect, okay, there's 20% of the airdrop users are actually vanity, just stable attackers for the airdrop. Farmers for the airdrop. So then that's a minus for the airdrop as well. And I think like the other thing to look at would be like the sentiments on Twitter or like in social media, where like a lot of time once the airdrop get launched, then people are like shitting on it because they're not happy with how the amount and the allocation look like, and kind of like some social slashing. But that one is probably harder to collect in terms of data. I honestly think
Yeah.
right now, like the airdrop token launch in general is just becoming a thing that your VC kind of requires also, like, because they kind of need to exit or like pump the paper value. This might be a bearish take, but
Well, it's just like
Shooting
I
some
mean,
shots here, like casually.
no, not towards any VC, but it's like,
wait, like projects raise not because VCs ask them to as well. It's usually also because projects need money, right?
yes, but they will promise a token launch at some point, so they can actually like lock in some, like, how to say, the liquidity, right? Like the LP money. Because
Yeah.
or
Well,
I'm
it's not a gun
yeah,
to the head situation, but yeah.
right.
I think that very much depends
Yeah.
on which side of the, I don't know, the bell curve you are here. I think they're like if you're a VC in the second Uniswap fork on whatever chain, I don't know if there's even VCs for these kinds of projects, but it's probably like you don't want to be in these situations. Like they definitely want you to launch a token because they're like return of or like they're, yeah, they expect to have liquidity fast. But then if
Yeah,
you go up the chain, and also if you go to like later series, like I think that kind of, how do you say that, the, not the responsibility, the expectation is gonna be like you can't just force like a token founder who's like collected several millions of dollars to launch a token. Like that's completely unrealistic.
Yeah.
yeah,
Yeah. No, it's. I mean, that's a whole other topic. Is like our,
yeah,
what is VC's impact? Which, like I said, I'm working on something of this kind for later. So maybe I'll have more answer on that time. But I don't think anyone has the right answer. And then again, VCs is a whole range of things where there's good and bad VCs. And how do you even measure who's good, who's bad? That's super
Yes.
subjective. I don't know. It's just trying to do our best and be the better version of Dragonfly that we can, and hopefully every VC does this as well. But yeah, of course, I feel like it's also tied to the legitimacy of the project. It's not just tied to the VC. Usually, based on which project you invest in, there's also different implications. Let's say, and there are some like based on everyone has a reference frame, everyone has their own view on things, but there's going to be top tier, lower tier projects, and all this. And the implications are so hard to actually measure. How do you define what is a positive and what is a negative impact? if you have a solution, please tell me. But I actually don't know because everyone's going to pick the reference frame where they are the highest. No one's going to say, "Oh, like, look, here's this result. I'm actually 50 out of 50." No, like, no
Yeah,
one
we are
does
just shit.
We're just horrible.
we're just greedy bastards that are here for money.
Yeah, obviously. And so
I mean,
no-
in the end, we
Yeah.
all are, like, obviously, but nobody wants to say that about themselves. Maybe my take on the airdrop stuff, real quick. I think like it has been tried in all kinds of variations and all kinds of stuff, and like nothing has really worked. Like I think what has worked is that there has been wealth effects inside of the crypto ecosystem that have in turn helped these projects kind of succeed. You like the Uniswap airdrop and the SushiSwap airdrop and whatever happened in DeFi summer. Uniswap, the whole of DeFi would not be around today, or like would not be as big as they are if all of these kind of wealth creation effects hadn't happened around that time. Because then those people went on to trade on Uniswap and to use Aave and to use like the 20 forks of Uniswap, which then in turn pushed Uniswap to innovate and to be better and to develop their protocols and their website and for infrastructure companies to be funded and so on and so on. So like, did this make sense for anyone individually? No, not at all. Like I think Jack Hexworth, the variant data guy, he put out a report like a year, 2 years ago on the Uniswap airdrop, and I think it turned out like 200k people got like the Uniswap airdrop or like claimed in the first month. I just had the article, but like I of course lost the numbers again. But it's like none of them voted in governments, none of them retained as a Uniswap trader, none of them fucking did anything with Uniswap ever after. I think like 2% of addresses still hold the Uni token. And it's a complete disaster. Like nothing. Like if you're like the only thing here was okay. Like we need to launch this. Like Uniswap doesn't steal our thunder, right? Uniswap was like essentially the equivalent product at the time with like liquidity mining, with like high APIs, APYs, and like a bunch of stuff. Just DeFi summer history. And it's like Uniswap just had to respond this way. There was no other way they were gonna kind of survive, even though they were the market leader. The other way would have been like release V3, but V3 was probably not even an idea. So it's like all of these things. Like, did any airdrop really make sense? Probably not. Did they make sense on an industry level? Like, did all of this energy that was put into the space actually make the space better in the end? Probably yes. So it's like, I don't know, in like a very weird way, this has all worked out, even for those people who, I mean, for some people, they probably just gave very free money, but then like they all profited from this themselves, as well as this was a liquidity event. And I don't know, the lockups in the last 3 years haven't been very stringent. This is actually a huge problem in the industry, where like a lot of founders are just in it for the quick win, and as soon as like, look at the Aptos founder, he just fucked right off as this like as he vested enough tokens to basically retire forever, like retire his whole bloodline forever. And it's like, those incentives are not good. Like the Web2 incentives, where it's like, oh, you grind for fucking 10 years, and then whatever, Facebook or Google buys your company, and even then you're like locked into some golden handcuff contract. Like that's a way better like strategy to extract human capital from people. And like what we have in Web3 with like, I don't know, like people just launching protocols and like having liquidity way too quickly is like, that's a huge problem. But like, thankfully, these people didn't just extract money for themselves, but also had to act in a kind of communally, like they had to give back to the community. So people, like the whole space profited as well, but like those people are just forever gone, and like the human capital is gone, which is like very sad for the space, because now those minds are missing in developing something.
You have the same in Web2 though. Like when you have large raises, something we think about is like, well, what could be also the impact maybe on the founder? Does it like go to his head like that? You know, he received a shit ton of money. Maybe that could be his exit, but that you wouldn't want that as the backer of this project. But it does happen in Web2 and Web3. The thing is, in Web3, it's by essence a lot more public.
In Web2, you usually like you don't buy the funder's shares. Like you just issue new capital, and like the funder isn't liquid in the moment that he raises a $1 billion round.
No, but the impact, I mean, the conclusion is the same, though. You have on liquidity events, you have founders leaving and parts of the team leaving
First.
because it can be the exit scenario that they were looking for. So that happens, I think, across both types of projects.
Oh yeah, but I'm
It's just
saying
happens
they're
slightly
just
differently.
way more frequent in Web3 because like the unique thing that Web3 has enabled is we can trade value over the internet very freely and very easily. There just isn't like there isn't like dude, I can't sell my Dune equity ever like until we get a liquidity event. So like I'm stuck here. If I had joined Optimism the time I joined Dune, like I'd probably like be unlocked like pretty like I could probably like I don't know if I could retire. I don't know what packages these people like negotiated at the time, but like the liquidity being in a kind of like Dune as a Web2 company is like is way worse than like having chosen to
Yeah.
work at any Web3 company. Which is like it's okay. It's
Okay.
probably good. I'm like my human capital stays in the space, but like I just think that's like a fundamental like giant problem of the system of airdrops and like of these early liquidity events. But thankfully, like my whole point is all of this has worked out for some reason because you can't just maximally extract for yourself like kind of the WeWork founder or something like this. Where like he and like the first I don't know 100 employees are the only one who got like filthy rich of this. We're like here in the hyperliquid airdrop, suddenly it's like 30K people have like a shit ton of money to spend, and they're just plowing this money into the space again.
Yeah. No, I think it's definitely a shift in how things work, and it has positives and negatives in terms of impacts. But like, I think we'll adapt and be just fine. But yeah, I agree. Maybe it has obviously negative impacts, but does it outweigh the positive ones? I'm not sure. Having liquid tradable tokens that anyone can participate on and is a free market. Uh, that is also part of what this allows, right?
I'm on the side of Wizboxer. I think like there's way too many founders in crypto that just like launch the token and become rich and like retired and like just like what is Blur doing these days? Like I think the whole team is just no longer working on it. And like there was like extra liquidity. I'm not affiliated or have any interest connected with them, so I can just talk whatever I want to say. But I think yeah, like it's kind of like a virus for the industry because like there's a playbook. If you want to be rich and go to Miami and starting to drive fast car, here's a playbook where you can just like plan a DeFi project and like have a TG plan and like, hey, like make sure your investor is gonna be happy and like your community gonna be okay and happy and like over time. I don't know, yeah, and then uh, nobody cares after a few years and they don't even remember and I'll come back to curse these people. And that's why I think one reason why our industry just I don't know keep rolling on some like I don't know. There's a lot of like if big infra project was a 1 billion evaluation kind of projection, and it's not landing anywhere. But I think yeah, I think like if a project is going to launch a token, if there's a TG, it's kind of doomed because like there will be people just have less motivation to keep working on it and keep grinding on it. And I'm hearing Boxer is saying, I mean, we should send this episode to Frederick, where because Boxer is saying I'm poor because there's no token. I'm joking, but
There's
yeah, I think, yeah,
No, I think
there's
there's
different
like
release schedules than just TG, by the way. Like, not everyone just it's not unlocked at TG like 100% for everyone, right? There's
sure,
there's
yeah,
better unlock schedules. I think are also part of the discussion. It's not like what you're pointing at is I think bad unlock schedules, which there are plenty, especially early on. But I think we also learn to adapt over time and actually make for a system that works better and works within this like new kind of paradigm.
yeah, exactly. I think that's like what like I don't think there's two sides here. I think we are like we're all I'm advocating for like better self-regulation of the industry.
Hmm.
If anyone goes out today and like their airdrop is like and by the way the team unlocks like linearly over 6 months, I'm like you guys are crazy. Like dump the token to fucking zero. This is a complete joke. Like what the fuck are you doing? Like what are you doing? I don't think this is like a like in any way like a reasonable thing to do anymore. So like I just like, and in the past these rules have not been upheld very well, and like I think part of that is also like the investors should have held up those rules better, but like that would have enforced themselves, like that would have probably been like to their own detriment of like, then we also need to, like, if we force the team to lock up over 4 years, maybe we should also like at least lock ourselves up for 2 years. So it's like there's like an implicit agreement of like, we're just not going to talk about this and we're just going to have the TGE, and then like, and these were like the lowest class of projects. I'm not saying like this is like super widespread, but like we have all seen so many, like, you guys have all been in like random Telegram groups, and it's like, here, check your airdrop allocation, and you just get a random like $800. You have no idea what this project is, no idea what the fuck has happened. Like, no, there's just no conception, and like somehow this is trading. There's buyers. It's listed on Binance, and like it's just magic money that rains from the sky, and like nobody knows what's happening. And it's like somewhere a guy is now sitting in Miami and drives a I don't know Porsche Macan and is happy. Like and like, to their credit, that's like good for them. Like the system was working this way. It's a crazy market inefficiency that has happened over the last few years. And it's like it's almost like ridiculous to have worked in like a instead of trying to exploit these market inefficiencies. But I think we're now trying to see, like, we're starting to see, like, VCs can't just fund anything anymore and actually get a return. I think, like, lots of I actually would be super interested in, like, the number of funds that are, like, net underwater on their investments. I think, like, there must have been so much bullshit funded in the last 2 years that just can't be profitable. Or, like, how many had to mark their book downs had to mark their books down by a quite significant amount. But yeah, we'll see.
So I just wanted to say something about like the implementation of airdrop these days, also just like very missing the point, where if you think about airdrop as an approach to user growth, like the user growth approach, like when you do product analytics, there's like the segment of people who are churning, people who are new, people who are retained, people who are resurrected, as in like they used to before, that died, but then you're trying to bring them back. And airdrop right now is not really they're basically either say trying to incentivize to reward people who are using the past with a good like potential metrics that's trying to filter out the farming, and maybe trying to airdrop to some random like other community or like other competitive projects to attract a new user potentially. So they're trying to cover like the outreach of new user, potentially trying to retain the user, but they're not doing anything about like resurrecting or preventing the burn, the churn of the user. So yeah, I think like there will be a lot more thing to be considered as well if you really want to find a like organ or a way to keep like your user organic and like keep your user grow with this like methods. The other thing is that I just feel like, I don't know, like attracting new community thing was done wrong as well, where for example like I was holding Milady and like I just get airdrop by all the projects somehow in like last year, and like another one is Pudgy Penguin. And just because these NFT community are somewhat like the largest and active one, where they're like, oh yeah, like the community is still doing things, doing like rave for Milady or like doing those like Pudgy Penguin toys in Walmart and stuff. So they just decided to like promote these two community. But like the result is not, I'm gonna go use those protocol. But instead, people are gonna just buy a Pudgy Penguin or like Milady. Like, what are you incentivizing here?
I think that's something else where it like airdrops are a chance to essentially run an ad on whoever is the airdroppee screen for a while.
Yeah,
And
yeah,
when targeting, Milady holders, they probably are more wealthy given that they hold an NFT that is worth quite some value than, the median claimer. So it is a way to like target a certain audience and put an ad on their screen. Do ads have impact? That's obviously, we wouldn't have ads if they didn't at all in general. So it has some impact. It has, it does put the name in your head, whether you consciously think about it or not. And when you come back to it, it may have some impact. But I'm not in the ads business. But I would say the study is very similar there than it is to airdropping to crypto users.
yeah. I would say this ads, it really what it did is just an impression rather than a conversion, right? Like it's like I
Yeah.
will know, okay, there's this project, what it does, and how do I claim the airdrop, and maybe I will onboard to a wallet if it's on like Celestia or like Cosmos. But then that's it. Like I might get the token, and I'm like, how do I get this money back to like EVM and just dump it? And so I think it definitely hits the impression, but it's a super expensive. It's like 20K or 30K for one impression, and instead of like actually even converting to use it. So
Right.
yeah.
But this, so the expensive part is that is up to the project to tweak the distribution. And what is if someone's 20,000, maybe someone else is 100, based on who they are, where they're from, and everything. And it's just really hard, honestly, to measure the impact of those. I don't actually know. I think it's an interesting thing to explore, but not my expertise on like what are the impacts, and especially since every project has a different kind of North Star or KPI that they're tracking. So normalizing this would be extremely really hard. You don't use NFT projects the same you use as dexes, as you use lending protocols and stuff like this. They all have different KPIs to account for that they're targeting, that they want to increase, and usually those metrics are kept internally. What they're actually tracking is not necessarily something they want to share publicly all the time. They may share like proxies of it, or like we may want volume, but what they actually want is fees, stuff like this. But it's you can actually guess most of them. Most business just want to make money, right? But it's I don't know. It's a space that is interesting to explore, and I think if you look at the history of airdrops, it's been a lot about exploration, and trying to one up the previous one.
Yes, I agree. I think they're definitely improving the approach, like trying to filter out the bad outcome and stuff. I wonder why nobody's doing this. Where like okay, one day I look at this, I have an allocation of this airdrop, but I cannot really transfer it unless I do interaction with the protocol. And like so, the more things I do with the protocol, and the more it gets unlocked, and then I actually can claim. And meanwhile, while I'm doing this, I'm already generating some fee and like revenue for the project priority. So I think like it's not hard to implement because you could just set the claim function by checking if this contract had this address that is claiming interacted with your like router or protocol ever.
If you look at so for example, I don't know what happened,
It
but
was like Zerion and Zapper campaigns
yeah,
with this, where it's like, you
Linea.
do like X action on Aave and then you get like a few bucks in Aave, and it's like it basically like then you have a different kind of custom acquisition cost where it's like you have the like it's just broken down instead of one giant airdrop. You do a bunch of micropayments to your users, which also like you want to earn money. This doesn't make any sense. Which Web2 business pays you money to like use their services? This doesn't make any or like gives you equity, like nothing. All of this, like I think like we need to look at this from the perspective of like that team wants liquidity or that team wants decentralization, and most of the time those two are kind of like linked. So like I think most of this was really like a legal theater of like we need to be decentralized. It's like we need to have like a notion of like we're not running this as a
Yeah.
centralized company, but rather we are a foundation and we're just stewarding whatever the development of this protocol. And it's like meanwhile it's like of course like the foundation is the company that like does everything. It's like like even in Ethereum it's like only EIPs from ETH researchers have so far passed the EIP process. It's insane. Like so what I don't know if that's still true. That was true when we were in Thailand. Somebody told me there. But yeah, like all of this is just theater. And like I think like there is no perfect airdrop. There is no good like is there a good airdrop? I don't know. Like what I talked about before of like collectively this has somehow worked out. But like is this really a good thing for any like singular company to give away like 20% of their stock for nothing? For like a one time, like you get like on the timeline of all people on Twitter for like 4 hours. It's like probably not. Like this is insane costs. But like that's just the cost of business in like these systems. And it's like you can't really like these comparisons to Web2 even they don't even make sense. So it's like it's just the cost of being the cost of doing business. Like this is a very weird industry. Like a lot of people had a lot of like there was a lot of legal uncertainty and a lot of like legal loopholes, and you needed to somehow decentralize, and some people were just trying to exit scam, and some people were just trying to get liquidity, and some people were forced by the VCs to launch a token because the VCs wanted exit liquidity. And it's like there's a whole like I think there's a whole universe here of scam and trying to evade the law, and like but also like legal things, stuff like, or like legit business move of like, hey, I want to compete with my competitor. I don't want to lose all of my users, so now I need to launch a token as well. All of these things combined, I don't think there's like one airdrop that really makes sense. I think like tying it back to the report, I think that is an interesting thing of like looking at all the numbers combined, because it is a very standard action. But yeah, will we ever see most of these airdrops again? I don't think so. Honestly, now that like Trump has launched a meme coin, like the SEC has retracted all of their, like Uniswap is free, Tornado Cash has been like took from the OFAC list, like so many good things have seemingly happened. Coinbase doesn't have a Wells notice anymore. Like all of these companies are suddenly like they're free. So it's like I don't think anyone has like a good reason to do airdrops anymore other than decentralization. And like, is that a good way to like achieve decentralization? I don't know. Like that's a question that somebody else
I think
can
that comes back
figure out.
What you're saying about like decentralization is like what you're hinting at is basically governance is broken, and I think that's completely right. Most governance processes like using tokens are not great, but I think it's a good place to evolve in. The problem is right now it's like ripe with like grifts and stuff like this, but you know it's a good thing to iterate on, and hopefully eventually we find a good solution to these problems. But you know it's the goal is pretty cool, I think, and like having working decentralized governance in a way that's not gained by certain parties who can quickly buy the token, submit a proposal, and vote yes on all things and stuff like this. But it's a really like decentralization is hard as fuck, right? You can see it like just on L1 scaling. Like it takes so long to actually get to a scale where the masses can use blockchains, and I think it's the same for governance and other things. We're iterating on the process that hopefully eventually works really well, and everyone can agree is maybe better than the status quo. We're just not there yet, but I think the end goal is kind of cool, and hopefully I hope we land on systems that manage to not easily, but to sieve out like farmers that are not contributing to the protocol and actually reward active participants and stuff like this.
Yeah, airdrops are kind of pointless anyways.
Airdrops are kind of pointless anyway, so it's like,
And I think with that we can close this. You've listened to the Index podcast. Thank you for listening, and see you all in 2 weeks. Bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bad chiller, cherry picking liar, we call them out and set chart crime on fire.